Hey everyone, it is Julie here with TipRanks, and today we're taking a look at two stocks that analysts rate a strong buy. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two companies that come in with a strong buy consensus from Wall Street analysts, plus price targets that would imply a double-digit upside potential. So today we're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. You can follow along with these stocks over on TipRanks.com or by downloading the TipRanks mobile app. There is links in the description down below. And just before we get into these two companies, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's get right into these two strong buy stocks. First on the list today is Mondelez International. Their stock trades under the ticker MDLZ, currently priced at $67.37. The stock has had some ups and downs in the past year, and overall is down 6% and has fallen about 5.5% over the last 3 months. Mondelez is one of the largest snack companies in the world. With global net revenues of about $36 billion last year, they hold the #1 global position in biscuits and #2 in chocolate, while growing rapidly in baked snacks. They sell their snacks in over 150 countries around the world, and their iconic brands include Oreo, Ritz, Cliff Bar, Cadbury, and Toblerone. They shared their Q1 earnings report back on April 30th, and the company did come out with both an earnings and revenue beat. For their first quarter, they reported earnings per share of 95 cents, beating expectations by 6 cents per share, and revenue came in at $9.29 billion, beating by $130 million. They saw organic net revenue growth of over 4.2%. Their CEO noted that they posted solid top-line results coupled with robust earnings and free cash flow generation in the first quarter, driven by strong pricing execution, effective cost management, and emerging market momentum. The week following, the company also declared their latest quarterly dividend, which currently sits at 42 cents per share for a dividend yield of 2.46%. That ex-dividend date is at the end of the month on June 28th for payment on July 12th. The company has been growing their dividend steadily for the past 11 years. Recently, reiterating their buy rating on the stock was an analyst from Bank of America Securities. They said that despite lowering future earnings per share estimates due to expected higher cocoa costs, the company's performance and gross margins during the first quarter of the year, which were driven by lower cocoa costs from effective hedging, underscore the potential for sound financial management to mitigate these pressures. We also recently heard from a 5-star analyst at Evercore ISI. They reiterated their buy rating, but did slightly lower their price target. They lowered it just $1 down to 79 due to those higher cocoa costs, but they do believe the company remains positioned to deliver 5% plus organic sales growth in 2025 and return to high single-digit earnings per share growth in 2026. The stock does currently come in as a strong buy based on 18 analyst ratings, breaking down to 17 buys and just 1 hold. And the average price target comes in at $81.17 for an upside potential of over 20%. And we have a pretty close grouping of price targets as we can see on the chart here up above. Looking at our most recent ratings down below, on the low end we do have our 1 hold rating here, still an upside of 11.5%, a lot of price targets in the mid-teens, and our high-end price target comes in at $90 per share for an upside of nearly 34%. Our second strong buy stock today is Flutter Entertainment. They trade under the ticker FLUT, currently priced just shy of $190 per share. And this is another stock that has seen some ups and downs over the past year, currently down nearly 3%, and in the last 3 months has fallen about 14%. Flutter Entertainment is a global iGaming and sports betting operation. Flutter operates as a parent company and has 15 brands underneath it, including major names in the industry such as Paddy Power, PokerStars, and Betfair. They reported a global total of 12.3 million average monthly players last year across all of their betting and gaming brands. They shared their latest earnings report a couple of weeks ago on May 14th. While they did see their revenue increase year over year, both revenue and earnings did miss estimates. For their Q1, they reported earnings per share of 10 cents, which fell widely short of expectations. The company said that this net loss was attributed to non-cash charges of $365 million due to acquired intangibles amortization and the fair value change in their Fox option liability. Revenue did grow 16% year over year, coming in at $3.4 billion, but this did miss estimates by $160 million. With this, though, the company did maintain their future guidance, saying that they remained confident in what they had previously provided. They also noted that during the quarter, there was a vote to move their primary listing to the U.S., and this was effective as of May 31st. The company also announced the transition of a new CFO. Just a couple of days ago, we had an analyst at Oppenheimer initiate coverage on the stock with a buy rating. The firm expects FanDuel to maintain leading U.S. market share and believes Flutter's higher unit economics make it best positioned to absorb more U.S. states potentially increasing online gaming taxes. They added that they see any further tax hikes accelerating FanDuel and DraftKings' emerging duopoly and eventually equating to higher advertising leverage. Overall, the Flutter Entertainment stock has 18 current analyst ratings, coming in as a strong buy with 16 buys and 2 holds. And analysts' average price target comes in just shy of $260 for an upside potential of nearly 37% from current prices. Looking down below, we can see that recent rating here from Oppenheimer with an upside of nearly 27%. Recent low-end price target is a hold here from Wells Fargo with an upside of about 12%, and just before it, we have a high-end price target from Jefferies with an upside of over 57%. So that is a look at 2 stocks coming in with a strong buy consensus from Wall Street and price targets that would imply some pretty impressive upside potential. Let me know your thoughts on these 2 companies and whether they were on your radar or not. I always love hearing from you guys. And of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are looking at. So please make sure you always stick to your own investment plan. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.